Okay, traders, today is Wednesday. It is the 18th of January 2012, Wednesday afternoon. And we are looking at the NASDAQ. We're looking at the NASDAQ weekly bar chart, traders. The NASDAQ weekly bar chart. And from what I'm seeing, it looks fantastic. I've been basically showing this chart to you for the last couple of weeks, and showing how it's broken out of this wedge right here, the red one, and is now breaking out, or has broken out of this resistance line, this blue one, and it is on its way up here, as it does whenever it seems to have hit the bottom and then starts making its way up past mid-ground. So it's past mid-ground inside of this right here, and it looks like now it wants to go. So I think the NASDAQ is absolutely telling us that it wants to move higher. We all know that futures trading is risky. It can cause substantial financial loss, so you cannot play any markets without stops and having risk capital. But this chart is telling you that you can play the NASDAQ on the upside and buy the major dips, because we are heading higher. Now, again, it's not like I put this chart together today to say, oh, look what's going on now. I've been showing this chart to you week after week in classes, in my nightly YouTube videos, and as I post charts on Chart Upload. So it's not new. We're not surprised, but you're going to find something pretty interesting by the time we're done looking at these charts. You'll also recognize that the NASDAQ a few months ago got above the 200 bar moving average. This one right here is the 200 bar. Let me label it for you. And that, I thought, gave me reason to think that we'd have a bullish year. We did, not as strong as everybody would have hoped for, but this is your 200 bar moving average, and here's where we got above it. This is August of this year. We finally cleared it. We did get above it way back here, but we tested it and cleared it and rallied up, staying inside of this major parallel channel and rallying higher. You might recognize that right here is building a brand new parallel channel now that it's staying in. And this is probably what we're going to do for a little while, is this channel will just get larger and larger as it starts to work its way higher. Nothing goes straight up, so we'll have our series of ups and downs on the way, as you'd expect. You get markets that do this on the way up, but I think eventually, after enough zigzags, we will find ourselves up here somewhere in this NASDAQ market. Remember that we are looking at a weekly bar chart, and weekly bar charts almost always give you a pretty decent view of where you're going next long term. As we're doing this class, I see the NASDAQ and S&P are breaking out for new daily highs. That is a very nice, clean breakout. And we should be very, very happy that our markets are this resilient, especially in the face of the downgrading in Europe just a few days back. Back to the analysis, though, because all of that comes out in the charts. So here we are looking at the NASDAQ weekly, and if you ask me, this looks pretty good, and I'm not calling for the market to drop right now, so this, this line doesn't even belong here. This is what I'm calling for right now, and then we'll see what sort of a pullback we're going to get. So this, I think, we're in for at this point in time, and then we'll see if it wants to have a bit of a pullback before continuing forward. But that's only one view, and you cannot just look at the NASDAQ and call it. You have to look at other markets. Before we leave this graph, however, I want you to recognize this, that this green, rather large parallel channel that we're in goes all the way back to the lows that were set in 2009. That's what we've been in ever since on the weekly chart. This was the crash low down here, and this big green channel is the channel that we've been in for quite some time, and that's the channel that we're concentrating on reaching the top of as time passes. So that's NASDAQ. Let's go look at the E-mini S&P. E-mini S&P looks really, really great right here, and this is a chart that I used in my last YouTube video. And I even left the words cornerstones as 2 words instead of cornerstone, just so that it really hits home when you think about this sentence, if you will. Repetitive patterns are the cornerstones of technical analysis. When you see a pattern and then you see it repeat and then you see it rebuilding once again, rest assured you have recognized a repetitive pattern or a cornerstone to what's coming next, which is calling the analysis correctly. Back in the crash of 2008 into 2009, we put in the V bottom. Came out of a V bottom into a parallel channel. That parallel channel got right to where it touches the 200 bar moving average and failed. Puts in another drop, which turns into a V bottom and then into a parallel channel. This time gets above the 200 bar moving average and stays above. What does it do? Next time it comes back down, has a swoon down test of the 200 bar moving average. While it's having that test, it puts in a V bottom and starts heading into a third set of V bottom parallel channel patterns. That is what we're in now. That is what I called in my video. That is what I am expecting to continue to happen. Again, we could end up doing things like this and bouncing down to here and then rallying back up. But it looks to me like this is what will be filled in as we go forward, looking at your repetitive patterns and the 200 bar moving average and how well this whole package has worked. Now, you'll also recognize that not only are we above the 200 bar moving average, but our U.S. markets are above the OMNI or OTAPMA, the Omni Trading Academy's proprietary moving average. This one, we're above that as well. That's going to be key as we come towards the end of this lesson, looking at that Omni OTAPMA or Omni Trading Academy's proprietary moving average, one of the ones that we use. You will recognize that for quite some time I've told you that when the United States comes out of its funk and comes into a real economic recovery, Europe will be 3 to 6 months behind us in its recovery. Now, you can read all of this on charts. Now, I'm going to show you why that's significant towards the end of this lesson, but remember this average right here, the Omni Proprietary, and that U.S. markets are above it as of right here. Yeah, let's call it the beginning of January, beginning of December. We're above the Omni OTAPMA, U.S. markets. Now, I'm going to just go down to a daily for one moment on this chart to let you see a picture. The weekly is basically the daily, only the daily's more spread out. We are in this parallel channel now. That is exactly what we were just looking at on the weekly, but I just converted this chart to a daily. The daily has the inverted head and shoulders, which is bullish, has the V bottom, which you've seen in the weekly, only it looks smaller in the weekly, and has now gone into the parallel channel, which you've also seen in the weekly chart. But this is the daily chart, and we are going up to these arrows. That's what's coming next. Again, on the dailies, we're above OTAPMA and above the 200 bar moving average. Let's switch back to weekly. Now, we've looked at the NASDAQ on the weekly. We've looked at the emini S&P weekly and daily. Let's stay with the weeklies for now and go to the Dow Jones Transportation Average. Look at this. First of all, this is the crash of 2008-2009, and this is the parallel channel that has developed long-term on the weekly bar chart ever since. Now I'm going to zoom in slightly on the chart. You'll recognize, just like the NASDAQ and the S&P, we are now above OTAPMA, and we are in a parallel channel pointing towards the upside. This is a weekly chart, traders. No joke, when you're looking at something this significant on a weekly, it's got a lot of meaning. We have broken out. We have gotten above what was resistance here. We are now up through that resistance line and creating a secondary parallel channel within the larger one right here, moving higher. So, the tranny looking fantastic, above OTAPMA, inside of its own parallel channel. A secondary parallel channel has now began to form. this market, once again, looks fantastic for the short-term trading on the upside. We're also going to look at the Dow Jones Industrial Average. Look at how smart this chart looks. You don't even have to really do anything but take a quick glance at it to see, again, here, held very well. Crosshairs of the OMNI Trading Academy's proprietary moving average and the beginning of the parallel channel. It holds well on a weekly, starts moving higher. Again, likely is building a secondary parallel channel right in here that will continue to move higher. Significant, another U.S. market above OTAPMA. Now, let's go take a look at our Russell. The Russell, which has been a laggard of the indices, the U.S. indices as of late, the Russell has not really kept up pace with the NASDAQ and the S&P. It's been a laggard, and you can see that it's just now getting above OTAPMA, and it is holding well in its parallel channel. It has broken above resistance as well, and we are now heading for a level of resistance much higher, which should bring us somewhere in the 820s, looking at the Russell. Again, really held the OTAPMA well here, held it well here. Now is proven that once it gets below it and stays below for a while, it spends a lot of time, but then once it gets back above it, the rally begins. So looking good on all fronts here in the US. Let's go look at the DAX. Represents Europe. Here is the difference. The 3 to 6 month time lag is right there before your eyes. This is a weekly chart we're looking at now, not a daily. We have not gotten above OTAPMA yet, and we just got above the 200 bar moving average in Europe just now. That is the exact same time lag that I pointed out to you traders 2 years ago when Europe started making moves that I thought would push their economy 6 months behind ours, 3 to 6 months, and look at the charts proving that to us now. Again, go to a U.S. market. We are well above that for weeks now. Go to a DAX market. We are not above the OTAPMA yet. That is the time lag, and that's all I think we're seeing, traders. I think Europe comes out of this funk just like the U.S. did. I think we're seeing nothing more than a time lag. I think that time lag will catch up with us shortly, that Europe will catch up with the U.S., and we'll plod along together, slowly coming out of our funk and more into our U.S. economic and hopefully worldwide economic recoveries. That's what the charts are telling me. It is what I've been professing now to you for the last couple of years, and we have been moving in that direction. And again, I'm only reading the charts to you. Then there's one other thing to look at, which is this dollar index. Look at this parallel channel. Remember, this was in a video a week ago, and I basically didn't know how long it would take, so I had that circle there and the 2 question marks. And the whole video was about this. And I wrote in the video, we went from here to here, and then we went from the lows to the highs, and then we went from the highs to the lows, and then basically we went from the lows up to the highs, and then we went from the highs, hitting the parallel channel, top and bottom each time, down to the lows. Then we just missed the highs up here and figured that we'd come down and tag, if not take out the lows just a little bit. Didn't know when it would come, so it moved out for 3 days, so maybe it'll happen today. But that's what we were expecting. Just another example of how well technical analysis works if you use it in conjunction with technical indicators, of course. We never just look at the graphs. And we look at the trend lines, the parallel channels, how this market has been acting, and repetitive patterns. Because as we know, repetitive patterns are the cornerstones of accurate technical analysis. Traders, thank you so much for coming to today's class. I hope this class helps to keep you in tune with the larger picture. Please feel free to ask questions. Once again, thank you so much for joining me in my session. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.